Hello traders, welcome to the weekly Algorithm Setups volume 215. Iliya here. You know what we're going to be doing in this one, having a look at the market, how it developed this week, what kind of opportunities we had, and most importantly, what we can expect for the upcoming week. This week was once again slightly bit tricky, especially at the beginning of the week, and I did learn my lesson from the past 2 weeks that again, you have to learn when to step aside, when to reduce your risk, and when to really stop trading. And I was really vigilant this week, which I'm very happy with because there were quite a couple of kind of losses that I pretty much skipped. And I only took one half loss on US30 and I took a full win on GU this Friday. So pretty much finishing profitable for the week. But my month is most likely going to finish at a loss because my Forex part of my trading is profitable. But Indices literally crushed me this month. So... So definitely probably going to have a losing month, but we'll see. We still have a couple more days. So this next week is going to be very, very, very tricky, just to start with that, because we're going to be having something extremely important, which is the interest rate decision from the Fed that is pretty much going to determine the outlook going forward. So we're going to have a look at that as always, having a look at all the pairs, going to throw the forecast, and then of course we keep going. By always remembering that we never know what is going to happen, and the only thing we could do is to flow with the markets properly, okay? If you're new to the channel, all about trading, I share these weekly outlook and setups every Saturday, and once per week I give my best to share an educational piece of content, so make sure to subscribe, turn on the notification bell, and let's head into the video. Alright, as always, we're gonna get started with the Dixie, and before we do that, let's just quickly go to the economic calendar just to show you that we're having a very huge week ahead of us. And honestly, if I'm to give you a tip, an honest tip, I would take a break this week. Personally, again, I'm a very huge believer of showing up every single day, every single week, every single month, executing the strategy, but again, trading is all about balance. It's not about showing up because this is again not a regular job. You have to know when to step aside as well and protect your capital, because again I had some incredible periods like previous months, but again this month the indices literally killed me as I started trading them for the first time, and I pretty much kind of lost a very big portion of my earnings. So again, you really have to know how to navigate the markets, when to trade and when not to do that. And looking at next week, we're starting Monday with some German news, so not very important. CPI for Germany, major impact, but again, not that important. Then we go on to Tuesday, interest rate for Bank of Japan, but that is pretty much not going to be something huge because they usually keep it the same. GDP for the euro, very important. Harmonized index of consumer prices, very important. And then on Wednesday, we have a bank holiday in Europe, but we have Fed's interest rate decision, monetary policy statement, and FOMC press conference. So that is huge. Because last time Powell was speaking, he was rather uncertain whether they're going to hike the rate or hold the rate, right? So that is very important. And this is why, guys, this is why we're having 4 weeks of consolidation on the DXY, because everybody is waiting for that interest rate. Everybody's waiting to see what the Fed is going to do. Are they going to hike? Are they going to hold it? Because that is pretty much going to determine where the dollar goes and where pretty much everything goes. Then on Thursday, we have Bank of England, everything, all the package, right? Asset purchase, interest rate, the Bank of England minutes, monetary policy report, and of course the governor speaking. And then on Friday, guess what? The cherry of the cake, non-farm payrolls and services PMI. So I'm very skeptical to be trading this week. We'll be showing up, but once again, probably with reduced risk and really being extremely picky with my setups. As I told you, going back to the DXY, well, 4 consecutive weeks of a chop, right? So there's no move up, there's no move down. You can clearly see that we're just in a, right around in a 200 pips consolidation for the last month, which is again, it's usually we can move 200 pips in 1 week. So again, we are sitting at a high, but we're struggling to do anything. So again, in terms of the weekly time frame, I cannot really forecast anything. And then dropping onto the daily, it's kind of starting to make a little bit more sense until it does not. We had this daily structure break and then the market pulled back, lower high, very good, but then the market comes down and again takes out the daily low, and you can see it takes them with wicks followed by massive engulfing candles. And you can see in this case we took out that daily low and we went on and we took out that daily high right there. So technically right now The DXY is bullish if I just look at wick breaks, which is what I personally do, but I observed the way they form, which is with wicks always. So wick down, this one held, wick down, this one did not hold. So right now we're breaking up with a wick. Is it gonna hold or is it gonna drop lower? Well, again, no idea. You can see the last 2 days also chopping around. So I would expect the DXY and everything else to chop around until the interest rate comes out. So currently in terms of the 4-hourly time frame, this is where we had the 4-hourly trend change, and the structure that caused the 4-hourly trend change is this. This, according to me, is not a valid higher low formation. So currently this is my 4-hourly zone. And of course below you have the daily. So are you gonna draw the daily? Again, this is your decision. Personally, I'm just gonna keep the 4-hourly time frame to keep the chart clean, but I'm gonna be aware that the daily time frame is bullish. And of course, if the market pulls back all the way down here and then aligns bullish on the 4-hourly from here, then of course you know that you have daily confidence and you can definitely go long. So right now, I mean, we are pulling back below the 50%. There it is, below the 50%. We came in, reacted from that little demand zone, but again, like in terms of scenarios right now, it's really hard to give one. We can of course push further into that zone, and if we get lower time frame confirmations, we can head higher. We can from here push higher, and then of course we have to see what is gonna happen. Or of course, we could just chop around and do nothing until the interest rate comes out. So again, in terms of the Dixie, don't have any outcomes, don't have any biases, because the Fed is gonna come in, say something, and it's just gonna wreck everything. So let's see, stay patient, right? Stay patient this week, because probably after this week, November is gonna go full power, no NFP, no interest rate decisions, everything is over. And then of course, hopefully we can get some clear markets. So let's be patient for that. Let's have a look at Euro USD. So I didn't take any trades on EU because EU has become really choppy, but this week I actually spotted it started moving and it provided us with a very clear weekly development, forming that weekly high on Tuesday and then having very nice shorts on Wednesday and also very nice short yesterday on Friday, although it didn't really follow up. So now, of course, the weekly time frame is at a lower low and we had a little bit of a brief pullback. So if you look closely, there is really kind of no clear unleft imbalance that is not filled. It's very slow, very nice to the downside. So again, I can't really say, well, the market's gonna pull back to here and then reverse. You can never do that. So this one right there that we have currently, around 3 weeks, a slight bit of a pullback, that could be enough for the market to continue pushing down. But once again, it really depends on what the Fed is gonna do. So the ECB came up, I believe, this week, but again, there was absolutely no reaction. The market did nothing on the ECB. Why? Well, because the market is waiting for the Fed, not the ECB, because that is going to determine pretty much where indices will go, where everything else will go. Now, on the daily time frame, these here are 48. Okay, so this one is a valid daily zone right there, but as you can see, it kind of just got violated by a pipette and it closed back inside. So you can see in the terms of the daily time frame, absolutely unclear. It was bullish for a while, but right now it kind of wicked down, but that of course might not be the higher low. This could be the higher low. Again, daily time frame sometimes tricky. So still has like that a little bit of a sort of a bullish bias to it, but also looking at how last week formed, I would expect next week to be bearish. But again, who knows? And you can see this week we had this very beautiful high created on Tuesday, and then Tuesday started by taking the previous daily high, the Asian high, and then it just dropped without an entry, which I'm very pissed with because I was quite, well, not sure, but I was quite expecting that drop. And even here on Wednesday, I told my team, don't look for longs from this demand zone. The market is just going to react and continue flushing lower. But once again, unfortunately, personally, I couldn't get any trades. My team actually got some nice EU trades, some nice profitable EU trades, but slightly bit forced, right? So there wasn't any textbook setups until Friday. This beautiful short from here, very nice. I took the same short on GU, but EU, I was outside of home. I went to travel, spent some time with some friends, and we didn't really manage to get inside this one because GU developed a little bit earlier. So right now, the 4-hourly time frame looks absolutely bearish. So daily time frame aligned bearish. It took the liquidity, it reacted, came back, filled in whatever imbalance there was. It came in, it took structural liquidity within above this high right there, which is super important. And right now you can see we immediately started reacting. We aligned bearish on the 30-minute, and right now we might actually roll down. So I am going to say that I'm more bearish than bullish on EU. So that is, I'm just gonna say this and I'm gonna leave it here. How is it going to develop? Well, I do think we can kind of get some early shorts on Monday, like if the intraday time frame allow it, if they develop properly in terms of liquidity and intra-session developments, then of course I'm gonna try to go short, targeting this hourly low right there, because again we just made the low right there on this push, and this is pretty much 1, 2, we can have 3, 4, and even 5. So I still see a lot of space to the downside. And if the market right now aligns to on the daily bearish, of course this is gonna become liquidity. That right there is going to become liquidity, and all the way down this is going to be liquidity. So let's see if that short bias is going to play out. I mean, the only long scenario I see is if we like break up, make a trend change, and then potentially go higher. Although I don't think this is very likely, because the market looks very nicely for a bearish move. But when something looks pretty nice, it usually doesn't go as planned. So keep that in mind. Having a look at Euro Yen, it did something very important this week. It took out that previous weekly high. So this weekly high formed on August 23rd, and it has been 6 weeks of actually staying below this and kind of pulling back, but it got really choppy at the time. And just right now we came in and it looks like we swept it. Like, I mean, look at the reaction, very nicely bearish. So most likely the daily time frame right now is going to try to shift bearish, but again, according to me, this is the daily higher low formation, and we're currently tapping inside. As you can see, there was one day we tapped in, reacted, but then the next day just pretty much absorbed all of that reaction. So if maybe the market was gonna go bullish, it would have maybe just filled the wick a little bit and then continued to push up. But no, it did not. It actually created almost an engulfing candle. So just basing it on the weekly, I do feel like we might shift down a little bit on EJ, similar to what we have on EU, because here we did create later a 4-hourly breakout structure lower. What caused it? It was this guy that caused it. You can see we came in, we gave a short trade, but then after this lower low, we came back and we made another lower low, which is good, but I really don't like all the wiki price action right there. So this is not a lower high, so pretty much our lower high is gonna stay within this guy. So that is our 4-hourly trend, and then here we are in a daily demand zone. So we are in a little bit of sandwich right there, supply and demand sandwich, which is what I call it, like the battle between supply and demand. So let's see what is gonna happen. But I'm more on the bearish side once again, but that also really depends on UJ, because UJ exited that ugly range. It has been staying for a very long time, and if it goes bearish, then this one is gonna flush, but if it goes bullish, Euro Yen is gonna find it hard to go bearish. So again, watch out the correlation. But again, in terms of scenarios, I mean, we can come back to that volatile zone and then get a short from here, right? Or on the open, we can get like some sort of a pullback or just flush. So as soon as we take out the daily low, that is most likely going to trigger some sort of a pullback. Okay, so take out the low and then look for the pullback, and then potentially look to continue selling if, of course, everything looks good. So that is my EJ outlook, more on the short side. But again, keep in mind, yes, the weekly time frame is bullish, and the weekly right now trades between this low and this high. But if you look at this over a weekly push, it's very weak. It's not very nice. But again, in terms of a pullback, we could potentially expect the market to dip below these lows. So again, as long as the market is above the 50% on the weekly, we could potentially try to go short. So let's look at the Aussies, starting from AU. So we're having a overall consolidation week. So we opened, we either pushed down and up and down again. We're going to explore this on the daily and the 4-hourly time frame, but we're having a weekly structure break to the downside. So the weekly time frame is bearish, and it looks like we have been throwing right now 2 weeks of pullback. So let's see how that looks like on the daily. Dropping onto the daily time frame, well, again, if you remember, it was quite tricky. And actually, if you watch my previous weekly outlook, it played out to perfection, because we had like this daily low right there, and the market failed to break it on 2 occasions, and then we had this internal liquidity right there. So the market came in, swept it, and then it took out the daily low. So right now, technically, we have a daily break of structure, and this turns into our daily supply. So the market is right now tapping inside daily supply, but look at how it broke. And right now it's coming in, it's rejecting, which is most likely the same range as the 4H. Yes, there it is. So right now, this is the daily high, and this is also the 4-hourly high. We are above the 50%. We filled the imbalance already. So this pair looks like really good shorts. But again, when something looks very good, I'm always very skeptical for that, right? Because the best setups usually don't look very good, right? But this one, pullback, 4-hourly zone is tapped above the 50%. It filled in the imbalance, and right now we're already reacting from that zone. most likely starting to shift on the middle time frames. So two scenarios on this one. We're either going to come back to grab some more liquidity and then give a short trade to the downside, or we're either going to just open and maybe start providing short setups all the way towards the low. Most unlikely scenario will be for us to break the high. And then, of course, from there, we're going to shift bullish and we'll see if it's going to go bullish. Because I think we had a couple of Aussie news. No, they're NZD news, trade balance for the Aussie. No, we don't have any important Aussie news. Yeah. So let's see. But I'm just going to shout shorts for now, and those are the two outcomes that I see for shorts. So let's see how it plays out. Not much of a development on the Aussie yen, so we're still trading for 3 weeks inside this very big daily bearish range, so from high to low, and we're chopping inside for an eternity right there and then dropping onto the 40 time frame. Everything is internal. So it came in actually to create on Wednesday that weekly high. It tapped inside the supply, which is very good. It took out all that internal liquidity. And then, of course, it very nicely aligned bearish. Right now, it pulls back and it looks like it wants to go bearish as well. So again, like, you really have to be careful on the intraday time frames on this one. You really got to play the intra-session developments, right? But again, I see it's actually trending pretty nicely within that very big forward consolidation. So again, you could definitely trade this one, but be careful because everything right there is internal. So again, if you get an intraday setup short, then of course we can try to take the market all the way down, which I think could take some time if like there aren't any big JPY news coming in, or if the JPYs don't flush. Well, we have interest rate decision for the JPY next week, so that could be important. But I'm gonna say bearish bias. I really like how this high formed, and because we have AU turning very nicely bearish, most likely those two are gonna go together. So let's see. But again, in terms of scenarios, I don't know, because we can just continue to chop around and we just don't know how it's gonna play out. So you have to learn how to flow with the intraday market structure. The NZDs, as usual, are weaker than the Aussies, and we're having another bearish week, forming a very nice weekly lower low. So we have a very nice push, very nice follow through, and right now it looks like we're starting to reject at a potential weekly lower low. So are we going to be having any sort of a pullback? Well, of course, let's see. The lower time frames are going to tell us. In terms of the daily, once again, we made 1, 2, 3, 4, 5 pushes on the daily, so I can start potentially expecting a potential pullback. That is the current daily range, okay? And then, of course, dropping onto the 40 time frame, that is exactly the same hourly range, which looks exactly the same as the Aussie, right? So from a hourly high to a hourly low, which is the same daily high to daily low, pull back above the 50%. It filled in the imbalance right there. We had the very last imbalance right there was filled. And right now we're having a very nice reaction. But again, keep in mind the NZD, it is, again, the market is never too low. Right, because here you can see like we pushed down, down, and down, and down, and down, and it just kept going down, right? But right now we took out a weekly low, and we're still dipping below it. So when a low is taken, the market tends not to continue for a very long time. You can see, for example, here, we took out a low, rejected, and down, and down, and down, but all weekend then we initiate a pullback, and then you get a bigger move. So a pullback is potentially coming, but is it going to be this week? We don't know. So how are we going to know? Is if the market actually makes a bullish trend change, and then of course we can start at daily / weekly pullback, okay? And if that happens, then of course all those highs to the left are going to become liquidity for targets. So as for right now, I'm gonna say, well, potential shorts either on the open. We can of course definitely try to take a short trade from there. If the market decides to grab more liquidity, it could come in, take out that high, okay, which is the previous daily high in that case. Yeah, Friday's high should be, yes. And then, of course, from here, if you get an intraday development, you can definitely try to go short. And then, of course, that is my third scenario. So that is the NZD, currently bearish on every single time frame. But the only thing that bothers me is that it's a little bit low. But again, the market is never too low, because when everybody thinks the market is low, that is when it actually flushes. So keep that in mind. NZD JPY also looks rather weak. We're having a very nice, which looks like to be a weekly pullback. But again, is it a reversal? Is it right now coming back to retest the weekly higher low formation? Because we're trading between this weekly low to this weekly high, and we pull back first below the 50%, but that was not enough. It was a very big rejection wick. The market came back to fill that wick, and right now we're actually breaking below it, which probably means that the daily time frame is bearish. And yes, you can see from here, we had a daily shift. The market retested supply, held from it, and went all the way lower to be making a new daily lower low. And right now, if you zoom in, so that is the daily lower low, and that is the supply zone, and the market already came in to retest it, and it's already flushing. So again, exactly the same setup as we have on the rest of the pairs. We have this hourly range, which is also the daily range. It pulled back, it filled in all the imbalance, and as you can see, the NZD-JPY, that is the only JPY and the only pair, because we have similar setup on the USDs as well. It is the only one that is coming close to the hourly low. Right, you can see NU. It's still kind of sitting in the middle, right? NJ, it's almost towards breaking it. So again, probably we're gonna break, and then after we break, you can of course start following the new ranges and see if we can get new lower highs to short. If it doesn't break for any chance, it's gonna give us some sort of a pullback and then potentially break. The bullish scenario, I don't really see it. I don't see the market from here reversing. What I see is maybe a break lower and then a reversal. But again, that is going to take some time. So for now, I'm going to go short. So if on the market open, you get any sort of a pullback to take a short, then of course you can take that and target the hourly low. But if the market starts by breaking the low, then you can expect the pullback. And then towards like middle of the week, because Monday makes the low, Tuesday pulls back to potentially create a lower high, and then Wednesday, Thursday, and Friday, you can potentially look and evaluate whether it's going to form a lower high to take another short. So let's see. I am bearish on the NZD-JPY. I'm bearish on NU as well. They all look bearish, but of course, let's see, because they're not that much impacted by the dollar, but the Fed is going to impact the whole market. So again, make sure to watch out for that. As we can see, USD-JPY has finally exited that ugly range that it stayed inside it for 2 weeks pretty much. We took out the high and we rejected. So this pair once again looks very, very, very high. Like we're coming in very close to this high right there, which is on this graph. Most likely it's the all-time high. But yeah, there's probably no, I'm not sure why I'm on Owanda, but there are other brokers with more price action. But again, we focus on the most recent one, as this is currently like the very recent massive major high. So are we gonna go on and take it and then reverse, or are we gonna start reversing from now? Where we're gonna see this week, which is very important for UJ, because we're having both Fed interest rate, and we're having then the interest rate for Bank of Japan. So usually the interest rate of Bank of Japan does not change, right? But what I think is happening right there is that we're a little bit extended, and the DXY and UJ deserves to flush a little bit. And that is, in my opinion, going to happen if the interest rates are not hiked. So if they're kept the same, because if they're hiked, that is usually bullish for the currency, and that might go up. And I don't think it has taken it into account. It could be because we were rather bullish, but again, maybe if it was taken into account, we would have popped up a little bit higher already. So again, very uncertain situation right now. But if the interest rates are kept the same, I do think then we can start seeing some shorts. So right now what we have is a daily trend change happened right there, and then we have of course the daily higher low formation right there. Right, and yeah, so let's see if this one breaks lower, then of course we're gonna have a daily bearish trend change, and then of course we can draw our supply zone and start looking for shorts. The 40 time frame is, I would just not touch a USD-JPY right now. I mean, just look at it. It's probably the same, but it also looks like, yeah, this one is also looking like a valid higher low, which means that the 40 time frame is bearish, and then this one is our lower high formation. I don't like it, and personally I think it's a very, very bad week to be trying to trade UJ because of the 2 news releases that we're going to be having. So be patient and wait for something clear. So if you like trading UJ, well, this year, well, not this year, but yeah, quite some time right now, it has been one of the worst pairs to trade. Right, so again, step aside, wait for it. It was exactly the same for a long time for the Aussies, for AJ, for NJ. They were sitting in that very big range for a very, very long time until they exited, and right now they're still very tricky, directionless. So let's see. Wait for Bank of Japan news release, wait for Fed news release, and then let's see how UJ is gonna go, and then potentially from next week we can hopefully get a clearer outcome, because right now I have no idea what is gonna happen. It can react from here bullish, it can pull back and react bearish, it can chop around, it can break down, it can break up. Again, we don't know, because the nature of the interest rate decisions and the price action they form is very volatile, and everything gets invalidated. So keep that in mind. Let's have a look at GU. So once again, you can see in the last overall 5 weeks right there, well, we're rather uncertain, and you can just clearly see it from the price action. It is choppy, right? It is tough, it is directionless, right? And that is since September. That is pretty much when I, like end of September and pretty much the whole October is pretty much when I entered a slight, well, not slight, it's pretty much a nice losing streak. And you can see it in price, right? It just got choppy. It's not clearly bullish, it's not clearly bearish, it's not actually moving, it is just chopping around. And when the market starts to chop around, it takes your stop losses and structure is not respected. So weekly time frame, again, we are at a lower low, we're tapping into something to the left, but again, I have no idea what is happening next. So dropping then onto the daily time frame, well, daily time frame is also super tricky because we had this daily bullish alignment right there. That made the daily time frame bullish. And then the market tapped inside this demand zone first, reacted, but failed to continue going higher. Then it comes back again, it's reacting again. But what is it going to do? Well, I feel like we're shifting more towards bearishness. This is actually the first week we had slight bit of a clarity because like last week was a pure choppiness right there. But this week we very cleanly came up right there. We filled in the imbalance that was caused by this massive leg right there. We then aligned bearish on the FOH. There was some shorts. And this is the last valid lower high formation that was retested on Friday's New York session. Okay, and although we're responding from that daily demand zone, and yeah, this was what was left, we responded from it. So right now, this is what is left from that zone. And again, what has been tapped right there right now should potentially become liquidity. So I'm gonna say bearishness, although I'm just afraid to be calling any setups within this sort of price action right there. I will say for now bearishness. We already came up, reacted from that zone, and right now we're starting to most likely align like on the lower time frames, like 50-minute broke up, broke down, and there is your short trade. But rather late to be taking it. But again, if you took the trade from here, set and forget approach, stop loss above, there is your 3R. Right? So there are setups. There are definitely some setups. So yes, that is GU. I mean, I don't really see how it's gonna play out. Most likely it's gonna come back up to gap some liquidity and then flush lower. It could just continue going lower. Oops. It could just continue going lower towards the liquidity target. It could pop up to take out that high and then potentially reverse or maybe even take the POI. Again, we don't know. So let's just flow with the market, not have too many outcomes. And again, just keep in mind, we have a lot of news. And also what we have for GU next week is, apart from the Bank of Japan, apart from the Fed, we have also interest rate decision for Bank of England. So most likely GU is gonna get chopped up. So once again, it's not a very good idea to be trading this week. Now, the trade I took on Friday is that guy. So bearish on the 40 time frame, 40 higher low. Sorry, 40 lower high, lower low. We pull back for potential lower high. Took out the Asian high, and then of course we started aligning. So first we had a bearish alignment on the 5-minute. We came back and I took the trade. Not sure where exactly I took it. It's not from here, but it's from there. So when the market tapped inside this supply zone, it aligned bearish on the 1-minute. So the trade, I think I got slipped a little bit because this one happened very fast. So I took it from there. Stop loss safely above, and then I was targeting the most. So I was targeting below the Asian low and the most recent 30-minute imbalance right there. So I closed 80% here. And why I closed 80% is because I thought that could potentially be a lower high formation and we could potentially continue going lower. So I just left some in case and I was targeting that, but then the market came back and stopped me out. So of course I didn't make a full 3R, but it was like two or maybe even a little bit less than 2. So not a very great trade. So once again, in the current markets, like a very big mistake my team, the Fanatic team, has been making also, and some of my mentors and the people I work very closely with, is to take trades, and all our trades hit like 3 to 4, but again, you have that hard time from expectation, and just because you're in a losing streak, you say, okay, well, I'm gonna let this trade play out and cover all my losses, then it comes back and hits your break even. So I had a lot of people taking a lot of break evens this week. Why? Well, because you simply don't take quick partials or quick profits and being chopped up in this choppy market. So again, in the current market conditions, if you get a 2R, if you get a 3R, just damn take it, okay? So bearish bias on GU, let's see how it goes. GJ, being a JPY pair, it is most likely going to be tricky. And once again, like we have interest rate for Bank of Japan, we have interest rates of Bank of England. So don't look to be trading that one too much next week. Now, for 3 weeks right there, we didn't really move. So after nicely pulling back down towards that weekly demand zone, we reacted, but then it's been 3 weeks directionless. Now, like you can see, the overall kind of, we're seeing rejection from the upside, which makes me think that it's most likely more bearish than bullish. And yeah, you can also see that on the daily. Like on the daily time frame, we got a breakdown here, but then we immediately kind of had a breakup there, and then it looks like right now we're having a breakdown there, and you can see that is a choppy price action. So daily time frame is currently bearish, of course, but then of course we drop to the 40 time frame. You can see it doesn't even hold from the lower highs. Like that was a lower high here. No, in fact, right there we had one. So that is the hourly break of structure lower. Then we had a trend change higher. And right now we're making a trend change lower together with a daily kind of break. Yes. So it is currently bearish, and that is our most recent lower high formation. But I'm just going to say it. Don't trade this, because we're overall having this consolidation right there on the hourly time frame, on the daily time frame. Again, the market is not trending right now. It is chopping in preparation for something, which again, what I think is the news next week. So once again, don't trade this one. Wait for the news. Be patient, because if you're not patient and if you don't know when to step aside and stop trading your pair, well, you're most likely gonna lose. But again, something like this could be expected, which looks pretty good right now, but anything can happen in the huge news week that we have next week. So be careful. Gold continues to be on a rampage, and we are headed towards the all-time highs. So there is the all-time high sitting at 2075, and we are just crossing 2K, which is a very huge psychological level for gold, by the way, and it's tapping like some sort of a supply to the left right there, but it's absolutely bullish. It is also forming a lot of imbalance on the way up, so of course there is going to come a time in which it's going to pull back, but we never know when that is going to be. So again, gold is currently influenced fundamentally, and you can see on the daily time frame it just goes without a stop, right? A lot of the pairs are just chopping the hell out right now, while gold is just making a beautiful uptrend. So again, gold traders right now are most likely having their gold rush, right? So that is the daily time frame from low to high. Currently sitting at a high, taking a lot of liquidity, so we could start expecting some sort of a pullback. But yeah, actually looking at it right now, this high on the daily pretty much happened in the last hours of the market, and this is the most recent hourly higher low formation. So we have a bigger daily range, we have a smaller hourly range. So again, what I would say is, of course, wait for some sort of a pullback and a continuation higher. I mean, there's nothing more to say on this one. Again, intraday, if you actually look at it intraday this week, I mean, it opened here. So there is Monday, and we didn't do much. Like all the way until, yeah, I mean, we didn't do much, honestly. Like if you look at it, because I had a look at the weekly time frame and it was looking all bullish, but that whole bullishness happened on Friday. So hopefully, actually, guys, I managed to catch some trades on this one, because again, like on the 40 time frame, it was just chop. It was bullish overall, trading from this low. Right, the market came in, retested the low right there, and then of course we should be heading for the hourly high, which was also the daily high. We broke it right now, but we have a bigger daily zone and a smaller hourly zone. So again, let's wait for some sort of a pullback and a potential continuation up. And where is the stop? Well, again, we don't know. We don't know. There are a lot of highs to the left that are going to be taken right now. A lot of uncertainty in the world. Gold keeps pushing up as a safe haven currency. So let's see how long it goes the uptrend for. But as long as it goes, keep following it. The earning period is over, so we're having a lot of companies releasing their earning reports, and pretty much it is almost close to an end. And this week we had the earning reports of some of the top 7 companies, and we can see that US30 finally decided to make some sort of a move and crush our liquidity target, which was down there. So we just took out that liquidity, and on the weekly time frame we're forming a new weekly lower high formation, so a very bearish market. And we also created a daily bearish trend change and forming that daily lower high supply. So looks pretty good. Again, on the daily time frame, well, no, I was actually wrong. We had a daily break here, we had a daily break up there. So that is the daily break structure lower. So excuse me for that. So there is actually the daily structure lower, daily break of structure lower. So right now we're sitting in a very big lower low, right? We're going to be tapping into something to the left. We took a lot of liquidity to the left as well. Earning report is over, so I think right now it's a pretty good time to buy some stocks. I'm definitely already on the way on doing that. And when it comes to the price action this week, no, absolutely bad. So that is your price action this week, and pretty much the flush happened on Friday. So like Thursday broke a little bit lower, and then Friday, like early Friday, gave a little bit of a pullback, and then it just came in throughout the day. But it was once again slightly bit hard to get in. So that is pretty much US30. So right now it's very bearish. We finally have some clues what is going on. So the key question is it going to continue going lower? Well, of course, let's see how the Fed goes on this week, and then of course we're gonna decide. So right now that is our most recent hourly range, from hourly high to hourly low. That is of course our PD range. We can be looking for the 50% pullback, for the imbalance to be filled, and then hopefully to have a continuation lower. So that is the textbook scenario. But knowing indices, they never work with textbook, and you always have to be vigilant, and you always have to be on the flow with these currencies. So again, that is the outlook. Bearish on every single time frame. Let's see how it plays out. One half risk trade that I took on US30, which was absolutely stupid, was to pretty much trade from the middle of nowhere. But yeah, I was expecting like a shorts overall, but very bad positioning. So that was the 50-minute and the 30-minute supply. We kind of came in first, took out the Asian low, then it broke low, then we came up, took out London low, tapped inside this area, and there was a 5-minute trend change and a 1-minute trend change from there. So yeah, took the trade. I'm not even gonna go, well, I'm going to show you. There it is, the supply zone. Liquidity is left. There was a fake trade change as well. 5-minute alignment, pulls back, confirmation candle, took the trade from there, stop loss above, got a stop loss. And then of course the market went to seek some more liquidity, took out that high to the left, and then it actually provided a short trade. But again, I wasn't really looking to trade anything at that time. I took that trade with a low risk, so pretty happy it was low. Because yeah, my losing streak on the indices keeps intensifying, but I am gonna catch them very, very, very soon. So that is US30, and that is my only trade on the indices this week. NAS 100 is fulfilling our first objective, which is this weekly imbalance right there. We have of course one below, but this one is the first one, also creating a weekly lower low formation. So could we start expecting some sort of a pullback? Well, definitely. But of course, if the market actually turns into a very nice downtrend, well, don't expect very big pullbacks. Now, we have a new daily structure break, because this pair, this instrument, was actually bearish all the time. So from this high to this low, everything is bearish. We pull back inside daily supply zone, and we flushed. And right now we have a brand new daily structure break here as well. Daily high to daily low, which probably looks the same as the 4H. It really depends whether you take this as a lower high right there. I personally won't, but you could definitely do that. So what I'm going to be focusing on is on this bigger range. So I would like to see the market pushes up a little bit higher, come to the 50%, fill in a little bit imbalance, maybe even come and tap these areas right there, and then maybe give us one more drop. So we can expect a little bit of a rebound. But again, it's really key to see how this reaction is going to go from here, because we came up, reacted. So again, guys, in terms of outcomes and scenarios, it's very hard this week knowing what we're going to be having next week. So of course, we can flush from here, and then of course, we never know what's going to happen. We can go higher. We can go higher from here, and then of course, wait for some sort of an alignment. A lot of things could happen. So this is currently how the market looks like. It's bearish on every single time frame. It's at a lower low. It's filling in weekly imbalance. It's taking a lot of liquidity right there. So I would expect some sort of a rebound. Right, and where I would project that rebound is to be around the 50% here, imbalance filled, and maybe even take us towards that supply. But again, who knows? So it could also continue flushing lower from here. So again, all the outcomes, all the scenarios. So again, guys, wait for Monday open, wait for London session to play out. Let's see what the market is going to do. And then, of course, objectively identify what is happening and then act accordingly. So that's it. But personally, I am taking this as the bigger range. So 40 high to 40 low. This according to me is not a valid one. If we don't break lower, if we break lower, then of course we're gonna have a valid one right there. But again, I'm gonna update you on that on Tuesday or Wednesday. SPX is reaching my first buying area, which is around 41.40, and that is pretty much around 10% decrease from the most recent highs, which is always a very good buying area if you are investing. So right now, of course, on the weekly time frame, we're bearish. We're making a new lower low, so we can, of course, expect a little bit of a rebound. But again, the question is it going to be a rebound or is it going to be a reversal? But again, that really depends on what is going to be happening next. And of course, looking at the state of the economy and looking at the state of the debt of the US, and then wanting to print even more money right now, and pretty much the whole stock market being carried by 7 companies, right? So 25 or 26 or some percentage like this, right? 1/4 of the market is being carried by the 7 companies, right? Google, Facebook, Meta, Amazon, Microsoft, Apple, and there was one more, right? So 7 companies are taking 25% of the whole SPX of 500 companies, right? So as those companies right now start decreasing in value a little bit, we're of course gonna see the whole stock market drop, because pretty much even NASDAQ has a very big hole. Like pretty much the top 7 companies of the SPX are all tech companies, I'd say, right? So this is why NASDAQ has always been a little bit more volatile, because the tech companies more volatile, and they're pretty much the ones that move the market overall right now. So right now, lower low formation on the daily time frame, lower low formation on the hourly time frame, a very nice flow. Here we have cleaner hourly structure. You can see actually the SPX is the weakest index right now, which is the only one that is making like clear hourly lower lows. So right now we're at a lower low. We can of course expect a pullback and a continuation, but we can also expect a trend change, push us back into the daily, and then of course take another short. But that is gonna truly depend on what is gonna be happening in the interest rate decision and how the overall investors and how the overall market sentiment is going to react to that. Okay, so that is my outlook on SPX. Very nice, very simple. And if you're investing, again, this is not signals or anything else, but personally for me, it's a good time to start dollar cost averaging and stacking up on some stocks, because of course the market could start going higher, it can continue going lower. So again, don't just buy your whole lot right there, just separate all of your positions into smaller ones. So that is SPX. Those are the 2 outcomes that I see. But of course, if I see any shorts, I'm definitely going to go for it. But I'm going to be very vigilant this week because of all the news that we have incoming. As a recap, I just want to drive this very important point home, is that next week we're having an absolutely important news week. We're having interest rate decision for 3 countries. Most importantly, the Fed, right? America. We're having a lot of GDP. We're having core harmonized index of consumer prices for the euros. And we're having a lot of other stuff paired with a cherry of the cake NFP on Friday. So drawing any scenarios and having forecasts and expecting the market to do something, you're thinking that you actually know what it's gonna do, is absolutely wrong. So right now, just flow with the markets and really allow it to show you what it wants to do. Because after this week, this is when I think we're gonna start getting the clear setups. Because after all the interest rates are out, potential investors can properly position themselves. Hopefully, the press conferences that we're going to be having from all central banks are going to offer us some clues and a little bit more certainty about where their economies is going to go and what they plan to do with their monetary policy. And hopefully that is going to give investors a little bit more of a sense where the market could go, which of course is going to make the market move. So again, don't forecast too much. Wait for this week to play out. Be very careful. Trade with low risk. Okay. And of course, flow with the markets. So traders, hope you enjoyed the video. Talk to you on Tuesday or Wednesday, right? Preferably Wednesday, in order to have a look at how Tuesday played out, because we have some important news on Tuesday. And then of course, we're going to take it from there. So have an amazing weekend and have a crushing week ahead of you, but always follow the plan, manage your risk right now, and be very vigilant.